Cross-border investment is key to scaling both early and late-stage businesses across Africa. But unlocking capital at scale means tackling syndication, regulation, and investor confidence. Fadilah Tchoumba, CEO of ABAN, now joins us on what's driving and also hindering investment flows across the continent. Ma'am Fadilah, very good morning to you, and thank you so much for your time.
Good morning, Tabitha, and thank you for having me.
Indeed. So to kick off our conversation, let us start by understanding some of the opportunities that we do have in place when it comes to facilitating cross-border investments in Africa.
There's a lot of opportunities that relates to essentially facilitating cross-border investment across Africa. And when you look at, for example, early-stage investment, you have the existence of more than 75 accredited business angels across 37 African countries, but you also have an existence of early-stage VC company deploying capital across a market. And of course, relying on these two bodies are of great use in mitigating risks related to expanding ventures across the continent, but also understanding the regulatory landscape and the compliance requirement much needed in order to remain both the investors and the venture benefiting from the investor being intact.
And yes, Fadilah, quite a number of dynamics I'm looking at the early stage businesses and also advanced businesses. But let us look at some of the deal flows and syndication here, because I'm looking at the potential of cross-border investment opportunities, identification, evaluation, and efficiently syndicating to mitigate risk and achieve scalability across diverse markets. So what are we seeing around deal flows and syndication at the same time here? You can break it down for us.
Well, it's very important for us to understand that for early stage investors, such as business angels and early stage VCs, identifying, evaluating, and efficiently syndicating cross-border investment opportunity to mitigate risk and achieve scalability typically involve several coordinated steps, right? Investors use a number of networks, including their own business angel network, incubator, accelerator, to source investable ventures. And there's also a number of regulated vetted platforms online that provide ventures to a wider range of investors. And standard due diligence are usually taken to place or applied in order to focus on local regulations, market potential, co-investment credibilities, and compliance. And we must note that efficient syndication is usually achieved through a lead investor or a platform that pool investor resources, spread risk, and bring more capital on board. And this model, for many reasons, has proven to be the best way to spread risk, increase the capital pool, and making sure that a number of ventures are being served and also have scale across border. And one thing that I would like to also mention is that African cross-border investors leverage a number of bilateral and regional tax treaties to reduce double taxation. So if you look at the Pan-African organizations such as the African Union and the African Continental Free Trade Area, you'll see that they're also driving a lot of regulation harmonization, making it easy for venture to scale continent-wide. And you must know that when we talk about early-stage investment, we're talking about community-based due diligence, we're talking about shared knowledge base, we're talking about the involvement of local co-investors to further reduce country-specific risk and also help build scalable portfolios. So as we speak now, African, for many reasons, right, when we look at the African investment scene, we can note that there's an increased collaboration that is tech-driven, that is based on standards that are set, which helps investors efficiently identify, assess, and syndicate financial resources and non-financial resources to mitigate risk across markets.
And yes, Fadilah, what I'm picking from there is that we do see the role of organizations and other bodies such as the ACFTA there when it comes to enhancing cross-border transactions. But investment instruments are very critical here when it comes to the growth of startups and even other businesses that we do have in the continent. But from where you sit, what innovative financial vehicles or co-investment platforms have proven most effective when it comes to attracting and at the same time deploying cross-border capital into early and also late-stage businesses in the continent?
I must say that, Tabitha, it's very clear that cross-border investing is often hindered by fragmented regulations, capital flow, complex capital flow, and inconsistent tax regimes. But I must also say that business angels and economic enablers are increasingly deploying a number of strategies to influence regulatory harmonization and also advocate for investor-friendly policies. And we have seen the involvement of ABAN as well as the African AVCA, the African Venture Capital Association, getting involved in pushing for this body to further making the environment more conducive. But we have also seen the involvement of the public and private kind of bodies involved in a number of dialogue to facilitate, but first to showcase the data, the importance of making it as easy as possible, but also to advocate for a better environment. And you'll see that today on the continent, Rwanda has been or is one of the preferred domiciliation where a number of early stage SPVs have been registered. Why are people going to Rwanda? I mean, for many reasons, right? Mm-hmm. Number one, the ease of registering the SPV. Number two, there is essentially 3% on corporate income tax. There's 0% on any tax related to dividends, as well as royalty payment. You will see that there's no restriction on foreign currency. You will see that there's no restriction on fund repatriation. And you will also see that today Rwanda, as an example, has signed tax treaties or double tax agreement with more than 12 different countries. And this is a significant kind of improvement and is a significant base and framework under which SPV can succeed and further increase cross-border investment across the continent.
Yes, so policy advocacy for an enabling environment for investors, very critical. But Fadilah, let us try and bring the point closer home. What has ABAN done and as an investor when it comes to businesses in the continent?
In terms of businesses, I must say that we have taken a number of action to further increase the pool of local investors participating in early stage investment. First, it started with a local market. And later on, we have seen more and more collaboration among local investors. And as an example, you see recently, we announced a deal that was co-invested between Nairobi Business Angel Network based out of Nairobi, Kenya, and More Angel based out of Port Louis, Mauritius, coming together to co-invest in a company based in Kenya called Branded. This is a significant importance to us because it actually proves the point that co-investment is the future. Co-investment is the way forward. And it will really and heavily help push for de-risking what is due diligence, de-risking capital, and encouraging even more investors to jump on board. But beyond that, 2 years ago, ABAN launched its platform called Catalytic Africa. Essentially, with Catalytic Africa, we're able to pool investment from over 200 angel investors, investing in 15 African countries, where we had about 21 companies benefiting from it. Now, you have to understand that it goes back to if we are, as retail investor, a business angel, able to support early stage company emerging within the continent. How do we do it best? And how do we make sure that the expansion of these businesses is as easy as possible? One thing is we have to rely on business angels to do that because they understand the local risk. They understand they can easily become the vote of confidence for other investors to jump on board. This is just another example that I wanted to share with you. But another example also that I wanted to highlight is the fact that ABAN had created an SPV, has established an SPV in Rwanda also. That has been one of the driving vehicles for cross-border investment. And this vehicle focuses on anything that is climate financing. And I still remember vividly one of the first transactions that we were able to deploy through that SPV, which involved more than 6 business angels from across multiple African countries that were able to leverage on this SPV to invest in a company based out of Ghana. This is purely a successful example that actually shows that the way forward is about collaboration. The way forward is about syndication, and the way forward is making sure that we have as many business angels involved, as many VC involved in coming together to accelerate the growth of early stage ventures.
Indeed, Fadilah Tchoumba, thank you so much for those great insights.